Good morning, good afternoon, and good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Pennylane, Arthur Waller. Thanks so much for joining me.
Hello, Elliott. Thanks a lot for having me today.
Okay, so before we get cracking, we're going to learn a little bit more about Pennylane. Okay, so, the only Pennylane I've ever heard of is from a Beatles song. Are you a big fan?
I am. Actually, when we were looking for an idea for the name of the company, we were looking for something that resonated with bookkeeping, accounting. It turned out that every name was already taken, simply because accounting is old like the word. And one of my co-founders had the idea of Pennylane because you've got penny, and it showed that we are, accurate and reliable. And that's how we came to this idea. We also thought that people would have the song in mind when doing their bookkeeping, which is usually not a moment of fun. So we thought it would make that moment nicer, and also that everyone across Europe would be familiar with the Beatles. So that's why we went for this name.
Okay, and for those who have been part of the Paris Fintech Forum Communities for a while, they may notice that you were once a winner of a Paris Fintech Forum award. So those people may already know a bit about you, but many people may not. So tell us more about Pennylane. You've already hinted at the accountancy angle there.
Sure. So the starting observation of Pennylane was discussing with small business owners around us, whether they were startups, restaurants, plumbers, that were telling us that they loved their accountants, but they were lacking the right tools to collaborate efficiently with their accountants. And they were also lacking some kind of single source of truth of financial data. So if you're a big company, you've got an ERP where you've got all your financial data centralized. If you're a smaller company, you don't have an ERP, and your financial data is basically siloed. There's sales, there's expenses, there's cash, there's your accountant actually doing your bookkeeping somewhere else, and all that data is not really well connected. And so the whole idea of Pennylane is bringing together the accounting, whether it's an external accountant or the accounting department of a slightly larger company, together with the company itself and the finance teams onto one single platform, one single database, and making sure that when one does some work, it reflects on the other side. So we kind of reconcile the different views of the world that accountants and normal people have of financial flows, to one, save time, to make collaboration easier and not having to send emails with Excel files at chat every time you want to know what missing receipt there is, etc. And three, because we built that single source of truth, we enable SMEs to make better decisions or accountants to give better advice. And we believe that SMEs are really the blood of our European economy. They create jobs locally, they pay taxes locally, and so we think that by helping them, we can make actually a great impact on the European economy.
And so you compete with the Sages and QuickBooks of this world. Is that a fair assumption?
Exactly. So outside of continental Europe, you've got QuickBooks and Xero, which are the two big players. And then within continental Europe, because accounting here is much more complex and different than outside of continental Europe, there is basically no QuickBooks or Xero. So you're left with legacy players like Sage, like Cegid in France, like Datev in Germany, Exact in the Benelux, etc. And those people basically only equip the accountants, do not equip the SME. On top of this, they obviously have on-premise solutions, no APIs. And so we basically try to replicate what QuickBooks or Xero have done, but in continental Europe, adapting to the needs of European accountants.
Okay, and just very briefly, we've seen you've raised, I think, close to $100 million since 2020. Can you give us some other numbers about Pennylane in terms of growth? And I suppose especially important at this particular point in time, the company's path to profitability?
Yes, so we are in a winner-takes-all market. So we are definitely not profitable. We are aiming to become profitable within 2-3 years. But if you look at QuickBooks and Xero, in the domestic markets, they've got 80 and 90% market share, respectively, of all SMEs. And so that's the same goal we have. So we are aiming to equip 80-90% of French SMEs first and then European SMEs. And you become profitable the day that you have that kind of mass market that you equip. Today, by the end of the summer, we'll be equipping we'll be overpassing 1% of French companies, which is already big in 2 years and a half. So we are talking about 30,000 SMEs that we'll be equipping by the end of the summer. And so it's big, but it's still only 1% of French companies, and we are aiming for like 80-90% within 4 years. So it's just the beginning of the story. In our business, it's extremely tough to replace those legacy software because they might be old. People have been using them 8 hours a day for 20 years. They know them by heart. They know the keyboard shortcuts, etc. So extremely tough to get to feature parity. But the moment you are there, the market can flip very quickly. So that's the game we are in, basically.
Okay, so we've heard about Pennylane. Let's now get to know Arthur a little bit better. So, Arthur, Pennylane, as I understand it, isn't your first startup. What's the appeal of founding your own company?
So I actually studied finance. I did a couple of internships in the UK. I first worked for the IMF and then for Goldman Sachs. Didn't really like both of them, and thought that many people would tell me that they would do this for a couple of years and then launch their own business. But realized that it's really tough once you're in a good job to actually leave it. And so I thought back in the days, 2012, I was 21 or 22. I thought there's no better time than when you're 22 to launch a company because I didn't have a family that I had to pay for. I also didn't have any good job I was really leaving, and so that was the number one driver, was like timing. And then I discovered entrepreneurship, and what I really loved was the adrenaline that came with it. So the excitement and the feeling that you are making a big impact, because when you start a company, it's small. Everything you do, like you come back home at night, you know that if you had not been there, it would not have happened the same way. So that's really what I love compared to larger companies, is really the feeling that you are useful and that you are really making a difference. And then with Pennylane, what I really love is I think we are solving real problems for real people. So the people that use our products are small businesses, the restaurant next door, the hotel, the plumber, and those are people that you can have empathy with, and they use our products every day. So we know that when we release a new feature, we get a thumbs up or a thumbs down very instantaneously, and that really drives my day to day.
And you sold your first company to Booking.com. Is it easier second time around, second startup?
Definitely lots of learnings that we could apply this time. So yeah, my short answer would be yes.
Many founders go it alone, I've found in all of these interviews that I do, because they want to avoid working as accountants or lawyers. Are you like an accountant trapped in an entrepreneur's body, since that's the area you went into?
No. So I studied economics, and I didn't know anything about accounting before launching Pennylane.
Okay. And obviously, running a startup takes up a lot of your time. Are you a kind of work hard, play hard kind of guy? Is that the kind of person you are?
Yeah, so I would say I don't feel like I'm working when I'm working on Pennylane, because I love it, because I as I said, feel that I'm solving real problems. So my type is, I don't really like, I'm always a bit playing and working in some sense. So people who work with me will tell you I'm spending lots of time laughing and having fun, but never really disconnecting, because it doesn't feel like I'm working if I'm replying to a customer email at 11 p.m. or something like this. So yeah, that's how I would answer.
And although the lines are blurred between your work and play, I mean, what does Arthur get up to when he's winding down, when he's having fun and laughing?
Love sports, especially soccer, and love watching news as well, reading about economics, documentaries, and then just seeing friends and family quite important to me.
Probably not a lot of time for much else, I imagine.
Yeah.
But okay, Arthur. So look, a key part of this interview is to get your take on the future of finance. But first, we're going to take a very quick break, after which we're going to continue our conversation with Pennylane co-founder and CEO, Arthur Waller. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, Arthur, so let's now talk about the future of finance. So, as we discussed earlier, you raised funds, I think, back in January. Was it just luck that you did this before financing dried up and valuations plunged, or was it deliberate? And how important was it to raise that money when it was much easier or much more possible?
Unfortunately, I have to say it's pure luck. uh, so that's the short answer, and definitely important because I think it gives us a competitive edge. The fact that we have money basically means that we didn't have to lay off people, and that we could, keep growing aggressively. We still have kind of reduced a bit the budget. So we are hiring less people than we had expected to hire to extend our runway because we need to be reasonable. But we didn't have to get rid of people or to decelerate our growth or expansion plans. And this is really because we've got the money in the bank.
And what do you make of the collapse of valuations we've seen, especially in fintech, including even some of the biggest ones out there like Stripe and Klarna? What's your take?
So I think there were lots of fintech businesses that were really overvalued. I think that like a business like Stripe, I still have to say I think it's a very solid business, very solid fundamentals. So I don't see a very strong rationale for decreasing significantly the valuation. Some other businesses like Klarna that you mentioned, maybe a bit more sensitive to market environment. I think more competitive, also less barrier to entry, I would say. In our case, I think that the chance we have is that we are a must-have product. So every small business needs to run accounting. We are very cheap. It's a mass market product, so we are not highly dependent on a couple of key customers. And because we are rather low cost, it's not something that people will cut when they need to save money because it doesn't make a huge difference. So if you look at QuickBooks or Xero, I mean Intuit or Xero, their market valuation has dropped like everyone else, but not that much. And also the market is still huge. So if you look at Intuit, I think they were worth about 200 billion before the markets plunged, and they are still worth 100 billion. So even if there are a couple of companies that were raising, saying I will be like my US counterpart that is worth 10 billion. If your US counterpart is now worth 1.5 billion, then you are in trouble. But if my US counterpart is still worth 100 billion, whether they are 200 or 100 doesn't make a huge difference. It doesn't impact that much my own valuation because the perspectives are still very big.
Right, and I guess if Apple decides to start competing with you, then you can also find yourself in not in trouble, but perhaps having some valuation issues. But of course, fundraising isn't the only challenge for fintechs right now, though. I guess it is linked to runaway inflation and soaring interest rates. What's your biggest concern, and the ecosystem's biggest concern right now?
I think indeed, like the uncertainty is bad. When you're growing a business, a startup, by definition, you already are facing a lot of uncertainty on your business, on the willingness to pay of your customers, etc. And so now we are just adding one extra layer of uncertainty, which is the market environment, which is the cost of capital, the risk appetite of your investors, stuff like this. And so I think you're just putting extra pressure on your business. And I think that what I'm always scared of is being put in a bag with other people whose challenges or problems are not exactly mine, and maybe being affected by less appetite for fintech or for risk, while I'm actually building a very infrastructure business, which should be less affected than a very volatile fintech business, for example. So that's my main concern, personally.
You're focused at Pennylane on France and Europe. Are the challenges facing fintech founders similar across the continent, or are some countries better or worse, or kind of, heading in the wrong direction versus heading in the right direction? What are you seeing across the continent as the founder of a fintech focused on Europe?
So for now, we only operate in France because bookkeeping is such a local thing. So before launching in another market, we'll have to fully localize all the accounting engine. And so for now, we decided to really remain focused on France only. But I'm obviously keeping up to date with what's happening across Europe. I think that France is actually a country where like startups have done have really penetrated the market well. So like Conto on the banking side, PayFit on the payroll side, etc. And I think we've heard recently that Conto might be buying Penta, the German counterpart. I think the big established players in France, like some of the big banks and etc., are not that good, and so it leaves lots of space and opportunities for new entrants. And so I think that France is in a pretty good position because there are lots of problems to solve for incumbents, while in other markets where fintech startups might be more of a nice to have and less of a must have, might be more in trouble.
Right, because one thing we are seeing as budgets are shrunk and people are being more mindful about being capital efficient, especially fintechs, we are seeing expansion plans, international expansion plans slowing down, or the brakes being slammed on those plans. So is there a way for fintechs to succeed globally, do you think, or are we always going to see this kind of geographical fragmentation in the industry?
I personally think that there are lots of fintech plays that are kind of winner takes all, and where the infra you are building will serve you in other countries, and the more data you have, the more accurate your scoring will be, etc. So I personally think there will be some European winners, but then Europe versus rest of the world is a different story. But I think there will be in the coming years some consolidation, and there will definitely be some European leaders on the banking side, on the accounting side, on the payroll side. Doesn't make the products that we are building are so complex because of the complexity that Europe offers for banking, bookkeeping, payroll, etc. That it doesn't make sense that you have 10 people rebuilding the same complex stuff. So. And once someone has built it, it takes so long to actually catch up that investors will not support the one who tries to go after the leading player if you know that you need to build for 5 years before you have a chance at taking the market.
Okay, so look, I mean, many of the biggest and best tech businesses in the world were actually founded during crises. With the benefit of hindsight, kind of, if you put yourself in the future looking back to now, do you think that we will see today as a great time to create a fintech?
I think so. I think the kind of crisis we are going through is forcing people to focus on revenue, and I think this is very healthy. It prevents founders from doing stuff that is useless and that people will not pay for, So that's my first point. The second one is really the access to talent. I think that we had reached a point, at least in France, where everyone was a founder because there was so much money being thrown in the ecosystem that it was getting very tough to actually hire talent because every talent wanted to launch their own company, and that the cost of launching your company was very low because you were very likely to get funding, especially in France from the public bank. And so I think that the financial markets being a bit tougher will push more people to go and work as employees. And it's important that they get skin in the game, that they get equity, etc. But I think they can actually make a greater impact contributing to a very fast-growing company than actually each of them launching their own small company. So I think it's beneficial for the entire ecosystem.
Sure, it'll make the war for talent somewhat less brutal. One imagines when there's more opportunity, and also the fact that some big tech is slowing down their hiring plans, so you won't have to compete quite as hard with the Apples or Googles of this world. So look, time now, Arthur, for our round of rapid fire questions. Are you ready?
I am.
All right, so we've got 90 seconds to get through as many of these as we can. I'm going to start my timer, and just one word answers is all I'm looking for. So away we go. What fintech segment, in your view, has the biggest potential over the next 5 years?
Accounting.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Investments tracking.
Are we at the beginning, middle, or end of the fintech wave?
Beginning.
Do you have a metaverse strategy?
No.
Do you think that regulations in the EU and US are keeping pace with new developments and behaviors in the financial industry?
No.
How would you describe NFTs, non-fungible tokens? Are they a scam or an interesting concept or part of the future that we really don't want to miss out on?
A scam.
Have you ever invested in crypto?
Bought one Bitcoin.
Are physical points of sales part of the future of finance?
I think so, yes.
On a scale of 1 to 10, where 10 is the most likely, how do you rate the chances that in the following 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
10.
That central bank digital currency, CBDCs, will become a mainstream reality in the US or EU?
6.
That you'll be able to open a crypto account at a top-tier bank?
10.
That SWIFT will still be the main tool for transferring money around the world?
8.
Okay, well, we've run out of time there, so thank you for playing along with us. As I say, we are out of time, so I really just want to thank Pennylane co-founder and CEO Arthur Waller for taking the time to speak with me today. Thank you so much.
Thanks a lot, Elliott, for having me.
And for everyone watching, we will be back again next week with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. That's all for now. Hope to see you next time. Bye-bye.